For the introduction, the purchasing cycle consists of the acquisition of goods or services in exchange for cash or payment to pay cash. In addition, audit of purchase cycle involves purchasing transactions that start with the requisition of the goods and services, are then received from supplier, and finally is to record all of the bills and payments of account payable. Audit of accounts in the purchasing cycle usually consists of combination of substantive tests and tests of controls to support an assessment of control risk that is below the maximum or at the maximum. There are two audit objectives. For the first one is to evaluate whether the account affected by the acquisition of the goods or services, and the second one, the cash disbursement for those acquisitions are fairly and presented in accordance with the generally accepted accounting principles. There are four management assumptions under the transaction objective, which is occurrence, completeness, cut-off, and classification. And then under balance objective, there are another four management assertion, which is existence, right and obligation, completeness, valuation and allocation. Last but not least, under presentation and disclosure, there are occurrence, right and obligation, completeness, classification and understandability, accuracy and valuation. There are three classes of transaction, which is acquisition of goods and services, cash disbursement, and purchase returns and allowance, and purchase discount. As you can see from the pictures, these are accounts in the acquisition and payment cycle. So there are account payables, the account. Under the debit side, there is cash disbursement, the amount we can get from cash in bank account, and then purchase returns and allowances, the amount we can also get from the purchase returns and allowances account, and then purchase discount, the amount from the purchase discount account. And then for the credit side, we have acquisition of goods and services. There are three items under acquisition of goods and services, which is raw material purchases, PPE, and prepaid expense. Other than that, there are three substantive accounts, which is manufacturing expense control account, selling expense control account, and administrative expenses control account. There are four themes under the business function cycle, which is first one, processing purchase order, and then receiving goods and services. The third one, recognizing the ability. Last but not least, processing and recording cash and disbursement. Under processing and purchasing order, there are two related documents, which is the first one, purchase requisition. Purchase requisition is used to request goods and services by an authorized employee. It may take the form of request for such acquisition by production staff or the storeroom supervisor tax. The second one is purchase order. Purchase order is a document to order goods and services from vendors. It includes the description, quantity, and related information for goods and services the company intends to purchase. Secondly is receiving goods and services. Receiving goods and services is the receipt by the company of goods or services from the vendor is a critical point in the cycle. It is when most companies first recognize the acquisition and related liability on their records. The related document for receiving goods and services is receiving report, a paper or electronic document prepared at the time goods are received, and it includes a description of the goods, the quantity received, the data received, and other relevant data. The third part is recognition the liability. There are a few documents related under the recognition liability. For the first one is vendor invoice. Vendor invoice is a document received from vendors and shows the amount owed from an acquisition. It indicates the description, quantity of goods and services received, price, cash discount term, date of the billing, and the total amount. Next, we have voucher. Organization used to establish a formal means of recording and controlling acquisition, enabling each acquisition to be subsequently numbered. Other than that, vendor statement. Vendor statement is a document that tells buyer certain things about the goods title they should know before signing a contract to purchase. A vendor statement is a legal document and it must be factually accurate and complete. Acquisition transaction file is a computer-generated file that includes all acquisition transaction process. It includes information of each transaction, includes vendor names, date, amount, account classification and description, and also quantity of the goods and services purchased. And then we have acquisition journal or listing. It is often referred to as the purchase journal. It is generated from the acquisition transaction file and also identifies whether the acquisition was for cash or account payable. It is includes total of every account number included for the time period. Next, also under the recognition of the liability, we have account payable master file. Account payable master file records acquisition, cash disbursement and acquisition, returns and allowance transaction for each vendor. The total of the individual account balance in master file equals to the total balance of account payable in the general ledger. Account payable trials balance includes the amount owed to each vendor or for each invoice or voucher at a point in time. It is prepared directly from the account payable master file. Last but not least, for the fourth, we have processing and recording cash disbursement. We have three documents related with which is first one, check. Check is a pay for the acquisition when payment is due. Companies use computer prepared checks based on information included in the acquisition transaction file when goods are received. It is prepared in a multi-copy format with the original going to the payee, one copy filled with the vendor's invoice. For the second, we have cash disbursement transaction file. It is a computer-generated file that includes all cash disbursement transaction processed by the accounting system for a period. Last, we have cash disbursement journal or listing. A list for the cash disbursement file that includes all transactions for any time of period. Next, misstatements that occur in the acquisition and expenditure business process. There are 6 things that misstatements occur. First, failure to record account payable at the year end. Second, failure to record accrued expenses at the year end. Next, capitalization of expenses. And then, the recording of expenses item at a wrong amount or in the wrong period. Failure to record payroll expenses or fringe benefits at year end. Last but not least, failure to record long-term liabilities.
So let's move on with the flowchart of purchase and payment cycle. As you can see through the flowchart, there are 3 types of department, which are purchasing department, receipt department, and account payable department as well. Now let's look further with purchasing department. First of all, an approval purchase decision should be made before we enter all the data. After that, purchase order program should be made before proceed to make 4 copies of purchase order. As for purchase order, for the first copy will be sent to the vendor, and the second copy will be sent to the receiving department. The third copy will be sent to the account payable department, and last but not least, the fourth copy will be sent to the store department. So let's look ahead with the next department, which is the receiving department. Receiving department is already on a purchase order from purchase order while pending arrival of goods. After pending, inspect and count of goods has been made before entering receiving data. After entering receiving data, receiving program has been done instead of 3 copies of receiving reports, which the first copy will be sent to the account payable departments, while the remainder will be sent to the store with goods. And the last department is account payable department, which a purchase order from purchasing department and receiving report from receiving department has already have in this department, as well as the supplier's invoice and remittance advice also has owned from the vendor before pending arrival of all documents. After pending, they will check accuracy of invoice, code, approved from pending, and prepare batch total before enter voucher data and verify batch total. Purchase program has been made before the purchase total agreement, and once batch total agreed, purchase transaction file yet has been done.
Now it's my turn to explain about the transactions related audit, key controls, tasks of controls, and substantive tasks of transactions for acquisitions. The first one is existing. The transaction that related is recorded acquisition of goods and services received consistent with the best interest of the client. For the key internal control, acquisitions are approved at the proper level, documents are cancelled to prevent their reuse. So there is 2 procedures, which is common test of control, and the next one is common substantive test of transaction. For the common test of control, we're gonna examine the indication of approval and also examine the indication of cancellation. Meanwhile, for the common substantive test of transaction, we're gonna examine the underlying document. Meanwhile, for the common substantive test of transaction, we're gonna examine underlying documents for reasonableness and authenticity, and also examine the vendor master file for unusual vendors. The possible misstatement for this is acquisition transaction does not occur during the period, but there is record regarding the transaction. The second one is completeness. So the transaction related is existing acquisition transaction are recorded. For the key internal control, purchase order are pre-numbered and accounted for. Receiving report are pre-numbered and accounted for. First procedure is common test of control. Account for a sequence of purchase orders. Account for a sequence of receiving reports. The second procedure is common substantive test of transaction. We're going to trace from a file of receiving report to the acquisition journal. The second one is we're going to trace from a file of vendor's invoice to the acquisition journal. Possible misstatement for this is financial statement will be overstated. Third is accuracy. The transaction related is recorded acquisition transaction are accurate. So, the key internal control is calculation and amount are internally verified. Batch totals are compared with computer summary reports. The first procedure, which is common test of control, we're gonna examine the indication of internal verification and also examine file of batch total for initials of data control plugs, compare totals to summary report. Meanwhile, for the second procedure, common substantive test of transaction, We're going to compare recorded transaction in the acquisition journals with the vendor's invoice, receiving report, and other supporting documentation. Next, for the possible misstatement for this is error in recording the purchase price. The fourth one is classification. The transaction related is acquisition transaction are properly classified. For key internal control and adequate chart of accounts is used. Account classification are internally verified. For the first procedure is contest of control. We're gonna examine procedure manual and charts of accounts and also examine indication of internal verification. Second procedure, common substantive test of transaction. We can compare classification with charts of accounts by referring to vendor's invoice. And possible misstatement that could happen, which is classification misstatements of unrecorded accounts. The fifth one is timing. So the transaction related is acquisition transaction are recorded on the correct dates. So the key internal control for this is procedures require recording transactions as soon as possible after the goods and services have been received, and dates are internally. So for common test of control for this is we have to examine the procedures manual and observe whether unrecorded vendors invoice exists. Second, we have to examine indication of internal verification. So for common substantive test of transaction is we have to compare dates of receiving reports and vendors invoice with dates in the acquisition journals. The possible misstatement that could happen in this is unrecorded or non-existent accounts or misstatement. The last one is posting and summarization. So the transaction related is acquisition transactions are properly included in the accounts payable and inventory master files and are properly summarized. So the key internal control for this is accounts payable master file contents are internally verified. So the first procedure, which is common test of control, we have to examine indication of internal verification. So the second test is common substantive test of transaction. Test clerical accuracy by footing the journals and tracing postings to general ledger and accounts payable and inventory master files. So possible misstatements that could happen is about understatements of creditors' account.
My name is Nur Azlin binti Zulkarnain, and the next part I am going to discuss is about the transaction related audit objective, common test of control, and common substantive test of transaction for cash disbursement. So first thing first, there is 5 parts we need to identify. The first one is transaction related audit objective, the possible misstatement, key internal control, common test of control, and lastly, common substantive test of transaction. For existent, the transaction related audit objective. Recorded cash disbursement are for goods and services actually received. The second one is the possible misstatement, cash disbursement recorded but not made. And for the key internal control, supporting documentation is examined before signing off check by an authorized person. And for the common test of control, discuss with personnel and observe activities. The last one, common substantive test of transaction. Trace the cancelled checks to the related acquisition, journal entry, and examine for payee name and amount. The next one is completeness, the transaction-related audit objective. Existing cash disbursement transactions are recorded. And the possible misstatement, cash disbursement recorded but not recorded. The key internal control. The bank reconciliation is prepared monthly by an employee independent of recording cash disbursement of custody asset. The next one is the common test of control. Examine bank reconciliation and observe their preparation. And the last one is the common substantive test of transaction. Reconcile recorded cash disbursement with the cash on balance sheet, the proof of cash disbursement. The third one is accuracy. Transaction-related audit objective. Recorded cash disbursement transactions are accurate. The next one is the possible misstatement. Cash disbursement recorded at incorrect amount. And the key internal control, the bank reconciliation is prepared monthly by an independent person. The next one is the common test of control. Examine bank reconciliation and observe their preparation. And the last one is the common substantive of test of transaction. Compare cancelled checks with the acquisition journal and cash disbursement journal. Recomputed cash discount. The next one is classification. The transaction-related audit objective. Cash disbursement transactions are properly classified. The possible misstatement is cash disbursement changed to wrong account. The key internal control, account classification are internally verified. The common test of control, examine indication of internal verification. And the last one is common substantive test of transaction, compare classification with chart of account by referring to vendors, invoices, and acquisition journal. For timing, the transaction-related audit objective, cash disbursement transactions are recorded on the correct dates. And the possible misstatement is the cash disbursement recorded in wrong period. And for the key internal control, procedures required recording of transaction as soon as possible after the check has been signed. And for the common test of control, examine procedure manual and observe whether unrecorded check exists. The last one is common substantive test of transaction. Compare date on cancelled checks with the cash journal. The last one is posting and summarization. The transaction-related audit objective is the cash disbursement transactions are properly included in the account payable master file and are properly summarized. And for the possible misstatement, the cash disbursement posted to the wrong supplier account. And the key internal control for this is account payable master file trial balance totals are compared with general ledger balance. And common test of control, examine initial on general ledger account indication comparison. And the last one is common substantive test of transaction, test clerical accuracy by footing journal and tracing posting to general ledger and account payable master file. The methodology for designing tests of details of balances for account payable. The first one is to identify client business risk affecting account payable. The second one is set tolerable misstatement and assess inherent risk for account payable. The third one is design and perform tests of control and substantive tests of transaction for the acquisition and payment cycle. The fourth one is design and perform analytical procedures for the acquisition and payment cycle. And for the last part is design tests of details of account payable balance to satisfy balance-related audit objective. There is audit procedures which is classified with 3 parts. The first one is sample size, the second one is item to select, and the last one is timing.
I will present about the balance-related audit objective and the test of detail of balance for account payable. The objective is to make sure that account payable is determined whether account payable balance is fairly stated and properly disclosed, so that's the objective in the audits. Firstly, we will start with detailed tie-in, where basically we want to make sure account payable in the account payable list agree with related master file and the total is correctly added and agrees with general ledger. So how we test for this is we added or use the computer to total the account payable list. So this is the first audit related objective. The next order to remain the objective is we are going to look at the existence. So existence is account payable in the account payable list exists. So what we do for this objective is we trace from account payable list to vendor invoices and statements. The next audit objective balance related on objective is completeness. Completeness basically is existing account payable are included in the account payable list. So what we do is we perform out of reliability test. This also called as unrecorded account payable. The next objective is accuracy. The accuracy is the account payable if the account payable lists are accurate. How to check for this objective is we perform same procedure as those used for existence objective and out of period liability test. Classification is what? Classification means account payable in the account payable list are properly classified, which means we have to review the master list for related parties, notes or other interest-bearing liabilities, long-term payables and debit balance. The next objective is cut-off. So cut-off is the transaction in the acquisitions and payment cycle are recorded in the proper period. So how we test for this is we test for inventory in transit. Next one is obligation. Obligation is the company has an obligation to pay liabilities include account payables. How to check for this objective is we examine vendor statement and confirm account payable. Lastly, the objective for this balance related audit objective is presentation and in disclosure. It is the account in the acquisition and payment cycle are properly presented and disclosed. We check this objective by review statement to make sure materially related parties and long-term and interest-bearing liability are segregated. That's all from me.
Now for the task 2, we have prepared past year question which we picked from February 2023. The question is, Sportify Sendirian Berhad is a company which involved in supplying sport equipment to customers throughout Malaysia. The sport equipment is purchased from foreign companies. As an audit senior, you are required to audit the purchase and payment cycle of the company. The purchasing and payment department of the company is headed by the purchasing manager, Encik Razak. Once the material requisition is received from the warehouse, the purchasing clerk will identify the list of suppliers from their database. The selection of supplier will be made through the system by the purchasing clerk based on his experience. After the order is made, 2 copies of pre-numbered purchase order will be generated from the system. 1 copy is given to the warehouse department while another one is kept in the department. Only orders from new supplier required from verification from the purchasing manager. Generally, it takes about 2 weeks for the materials to arrive in Malaysia. When the materials arrive at the warehouse assistant will take charge to acknowledge the goods received, not the document. Then he will use the purchasing order and the goods received note to prepare a copy of the receiving report. The receiving report is then given to the account clerk in the cash disbursement department. Using the receiving report and the supplier invoice, the account clerk prepares 2 copies of the check to be verified and authorized by the accountant. At the end of the month, the accounts clerk will prepare a bank reconciliation statement and the disbursement documentation will be kept in the file.
So, the first possible internal control weakness from the question is the selection of suppliers is based solely on the purchasing clerk's experience without proper procedure. So, there will be impact of the weakness to the company, which is the company will increase the risk of favorism, lack of competitive pricing, and potential of fraud. It may result in higher costs, lower quality materials, and selecting wrong suppliers. So, there will be a suggestion to rectify the weakness. The suggestion is implement a review process where all suppliers are verified by the purchasing manager.
The 3 parts we need to identify to discuss this question is the first one is the possible internal control weakness, the second one is the impact of the weakness of the company, and the last one is the suggestion to rectify the weakness. So for the possible internal control weakness, the copies of purchase orders are not adequate where there are only 2 copies of pre-numbered purchase order generated by the system. And the impact of the weakness to the company is the possibility that late payment to supplier or over underpayment to supplier. And the suggestion to rectify the weakness is to increase purchase order copies, implement an electronic system for better tracking and automated matching.
So let's move further with the next part to answer this question, which is the possible internal of control weakness is no verification or authorization on the purchase made, as only order from new supplier require verification from the purchasing manager. The impact of the weakness to the company is the possibility of unnecessary purchase is made. The purchasing manager must authorize the purchase. And suggestion to rectify the weakness is there should be a system whereby all pre-number purchase requisitions are raised and signed by purchasing manager for verification.
Three part we need to discuss on this question: possible internal control weakness, impact of the weakness to company, and suggestion to rectify the weakness. For the first part, no physical count and inspection of materials received by the warehouse assistants. Impact of this weakness to company is possibility that missing documents cannot be detected and payment cannot be made to suppliers. And the suggestion is to rectify this weakness is physical count and inspection of materials should be performed by warehouse assistant and supervised by warehouse manager.
Last but not least, for the possible internal control weakness, we have no proper segregation of duties where the accounts clerks has access to preparation of checks and also prepare the bank reconciliation. So the impact of the weakness is the possibility that the account clerk will manipulate the account. So for the suggestion, there should be segregation of duties in preparation of checks and the bank reconciliation. That's all from us. Thank you.